Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 30th of May. All right, as we come into the Asian session here, the whole week, for my liking, has been suffering from a major hangover. Okay, a hangover from the UK-US holiday on Monday, and also a major hangover from these geopolitical events, which just keep sort of bobbing up and poking their head in the way of things. So that leaves us with normal market conditions, normal liquidity, but momentum fading across the board. And there's been a few sporadic movements, and this is really what happens when there is no clear direction across the board. And in particular with the US dollar, we're starting to see really aggressive moves on data that otherwise wouldn't move. Now, sterling's, it is moving lower. We know it's a geopolitical event, so that's a bit of a tricky one. Dollar CAD has broken higher after the Bank of Canada left rates unchanged and also moved to a neutral stance. Now, to me, this move higher looks like a bit of a short-term one, but it's not my job to make a subjective decision there. It's going up, so I have to sort of recognise that, but it doesn't go with the overall fundamental outlook, so that'll probably hold me back. Still, at this point, the Aussie and Kiwi, even though they've been trading predominantly sideways this week, they aren't rallying. Right, this isn't a change in the rally. This is the overall trend, hourly, daily, weekly trend lines. They are still pointing lower, and it goes with the fundamental outlook. Now, as you go through the month, that outlook fades, right? So the influence from the central bank decisions last month, well, that's fading as well. But still, you've got to respect that's where they're going at this stage, and that's where the trends are. Now, let me just have a look. I can show you on the charts. You can see where traders are just sitting back and just, you know what? I'm just going to wait. Like if I just get the on the right chart, the Aussie, broke higher end of last week, just been trading sideways. The Kiwi did the same thing. As I said, some negative comments there from the RBNZ yesterday. Saw it 30 points lower, and at 30 points at the moment seems like a big move, right? Which is completely weird. Dollar yen, well, it's just been dancing with the devil, trading sideways, up and down through that trend line around the cloud. No major emphasis. If anything, we've seen dollar squaring up. Bit of strong US numbers, but also, because it's out of the media, like the US-China situation and all of other Trump's antics, traders start to square up because it loses that downside momentum. So that's what's happening there with dollar yen. To me, sideways. As I said yesterday, a chance to see 110. We may still see that now. What I think is a trade that's really building an opportunity, and at this stage, I've really widened out the chart here, but euro to the downside looks like a really good opportunity, right? There are more EU officials saying the ECB are ready to act if there's no change in growth and et cetera, et cetera. So to me, euro is the dark horse. That's probably the clear opportunity coming up, which it hasn't really moved far yet. Now, sterling, it is all over the place, but on the longer term, it is going down. But very hard to trade that. So, and if you're finding you're having issues with your P&L on sterling, take sterling out of your trading instruments, right? I see so many guys saying, "Oh, I'm getting beaten up on sterling." It's like, yeah, because we don't know what's happening. You don't know where it's going. Now, yesterday we had the Bank of Canada interest rate decision. Now, look at the price action here. It was a bloodbath. I highlighted this on the yesterday's FX Market Insight. If there's no change of rates expected, this is going to be a convoluted event. Now, I was sort of thinking, well, we could see a break above 135, the figure, which we did, okay? But then it shot down to like under 80, so you'd already be out there if you're looking for the break. And it's shot higher, screamed higher, and now it's back lower again. So this is typical of an interest rate meeting where there's no change in rates expected, and what you get is ambiguous statement. They've gone into a neutral stance, and basically the currency is almost back to where it was, right? Exactly as I said yesterday. Stay away, know what to avoid. Do not walk into a bloodbath, which is exactly what these central bank meetings are if there's no possibility of a rate cut or rate change, I should say, not just cut. So that's where we are with the majors. All right, so the general news out there, and I'll just give you a quick look around. The general news is basically just mixed, okay? 1 week there, and understand this is a geopolitical situation. Dollar rises amid US-China trade worries, Okay, last week that was dollar falls amid US-China trade worries. They can't have it both ways. So just understand this is a convoluted event for the media outlets who are just regurgitating the same crap. Now, there's a whole range of different things here. Canada want to ratify the North American trade deal. Brexit concerns, etc., etc. It's just basically geopolitical events that are dominating and are very tricky to work out when they start, when they finish, and where the direction comes from. So all we've got to look for today with the upcoming releases now, there's a couple of key ones coming up now. The CapEx numbers out of Australia. This is another number that could actually tweak in. Now, the Kiwi's already lower, so we may see some weak numbers a move down. Now, the overall outlook for the Aussies down, fundamentally and technically, so I'm not looking for a trade to the top side. So isolate your trading opportunity. The good thing is we do have the US prelim GDP numbers. Now, I've made this a blue number, so you can hold positions through it. It's not like the non-farms where it gaps, but this will play a part in the dollar movement for the North American session. So understand that, and if you can't be at the screens, check it out. Now, we have also the Bank of Canada Deputy Governor Wilkins speaking. She did come out, I think, a number of months ago and was sort of wheeled out to do the heavy lifting for the Bank of Canada. So just be aware she may shed a bit more light on the Bank of Canada's future forward guidance, and that may come into play there. The Tokyo CPI, okay, lasting for the next 24 hours. No major change there. Don't get yourself excited about that event. All right, so really, if you're looking through the sessions, there's a little bit for everyone. European traders, probably not so much. CapEx for the Asian session, the North American session. You've got the prelim GDP numbers, which you can hang your hat on. Wilkins speaking, that could be a very tricky one to manage. So make sure you are square CAD positions around that, because we have seen it move 100 plus points on her speeches. All right, guys, that's it from me. There's, as I said, it's a bit of a hangover week. Not a hell of a lot to sort of go by, so just relax. It's the last week of the month. It's pretty traditionally a sideways moving month. We get all fresh data next week, so just hold your horses and look for the good opportunities. Okay, around the technicals, to me, Euro looks like the best potential technical trade. As far as the data goes, it will direct you where the momentum is going to be. All right, guys, have a good one. We'll catch you in the 247 trade zone. Cheerio.